Imagine this. Every year, ATMs across the globe process around $12 trillion in cash withdrawals. That's more than the GDP of the entire European Union, flowing directly through a network of machines most people rarely think twice about. But here's something even more surprising. A significant portion of these machines aren't owned by big banks or financial institutions. They're operated by everyday entrepreneurs who see ATMs as a reliable stream of passive income. With a few strategic placements, an ATM owner can generate revenue from transaction fees every time a customer withdraws cash. And in today's economy, where cash use is shifting yet still critical in many areas, this industry is ripe with opportunity. But what's driving this growth? And why do so many entrepreneurs see potential in a business model that revolves around machines people often take for granted? The ATM industry has evolved tremendously since its inception in the 1960s. Once limited to banks, ATMs are now fixtures in convenience stores, shopping malls, restaurants, and even remote locations where people need easy access to cash. Driven by a mix of technological advancements, changing consumer behavior, and the enduring demand for cash access, the industry has grown to serve a wide array of needs across demographics and geographies. In this video, we'll delve into the world of ATM ownership. First, we'll look at the unique opportunities this business model offers, from revenue streams to independence. Then, we'll discuss the essential steps to get started, including licensing, machine sourcing, and location strategy. Finally, we'll explore the long-term potential of this business and how to navigate the challenges that come with it. By the end, you'll have a roadmap for understanding and leveraging one of the most underrated cash flow models in the modern economy. Step 1. Understanding the opportunity. Why invest in ATMs? The ATM business might seem unconventional, but it's surprisingly lucrative. Think of ATMs as miniature banks that collect fees for every transaction, fees that go directly to the owner. On average, each transaction can generate a fee ranging from $2.50 to $3.50, and in busy locations, an ATM can process hundreds or even thousands of transactions per month. For entrepreneurs, this business offers a unique appeal: low overhead, passive income, and minimal day-to-day management. Beyond simply earning on transactions, there's the advantage of owning an asset with enduring relevance, as cash, while evolving in use, remains an essential part of many economies worldwide. Demand for cash remains consistent in certain segments. For example, cash-heavy industries like convenience stores, bars, and tourist attractions often see a steady flow of customers needing quick cash access. And despite the digital shift, many consumers still prefer cash for budgeting or privacy reasons, especially for smaller transactions. This ongoing need underscores the relevance of ATMs, especially in locations where cash is preferred or digital payment infrastructure is limited. For those considering the ATM business, strategic location is the cornerstone of success. ATMs thrive in high-traffic areas like gas stations, entertainment venues, or areas with limited bank access. Location selection is about understanding the patterns of cash usage and the types of businesses that attract cash-dependent customers. By identifying such spots, you're setting your machine up for maximum exposure and use. With minimal overhead costs once the machine is operational, each transaction contributes directly to profitability, making location a game-changer in ATM business success. Step 2. Getting started. Setting up your ATM business. Once you're ready to dive into the ATM business, there are 3 critical steps: sourcing the machines, securing permissions, and choosing the right placements. Let's break these down to help you navigate the setup phase efficiently. 1. Machine sourcing and purchase. ATMs range in price depending on their features and specifications, generally costing between $2,000 and $3,500 per unit. You'll need to decide whether to purchase new or refurbished machines, balancing upfront costs with longevity and performance. Key features to look for include EMV compliance for secure chip transactions, easy-to-use interfaces, and reliable cash dispensers. Opt for machines that come with robust tech support and warranties, as they minimize risks of breakdown and repair costs. 2. Licensing and compliance. Each jurisdiction has its own licensing requirements, so understanding local regulations is essential. Often, ATM operators need to register their machines with relevant financial authorities to ensure compliance with anti-money laundering laws and to establish legitimacy. This may require securing a business license, insurance coverage, and specific ATM permits depending on local laws. Taking the time to address these regulatory needs not only keeps your business above board, but also reassures partnering establishments of your professionalism and reliability. 3. Location agreements and placement. Many ATM business owners partner with existing businesses, offering them a share of the transaction fees in exchange for hosting the ATM on their premises. This can be an attractive proposition for small businesses that benefit from increased foot traffic and customer convenience. Negotiating favorable agreements involves understanding the host's expectations and setting a revenue-sharing model that incentivizes both parties. Be clear about maintenance responsibilities and establish terms for any potential relocation, ensuring flexibility as business needs evolve. To maximize your ATM's visibility, prioritize locations with high foot traffic and minimal nearby ATM competition. This might mean scouting areas with limited banking facilities or placing ATMs in businesses that cater to cash-reliant customers, such as nightclubs or event spaces. The more you cater to specific cash use scenarios, the more likely your machine will be a go-to option for those in need. Step 3. Scaling and navigating challenges in the ATM business. After establishing your first ATM, you'll want to consider strategies for growth and sustainability. While adding more machines can lead to increased income, effective scaling involves a mix of smart management, consistent cash flow planning, and staying ahead of industry trends. 1. Cash management and maintenance. A common pitfall for new ATM owners is underestimating cash needs. Each machine must be loaded with sufficient cash to meet customer demand, especially during peak times or in high-demand areas. Consider partnering with a cash logistics service or setting up a reliable schedule for cash replenishment to avoid downtime. Effective cash management minimizes missed revenue opportunities and enhances customer satisfaction. Maintenance is equally crucial. Machine outages can frustrate users, reduce trust, and lead to lost revenue. Invest in remote monitoring software, which enables real-time tracking of machine status and alerts you to issues like low cash levels, paper jams, or software errors. With a quick response system in place, you're better equipped to keep machines operational and profitable. 2. Technology and adaptation to industry trends. Technological advancements continually shape the ATM industry. Upgrading to machines with cash recycling features, for instance, can streamline cash handling, allowing deposited bills to be reused for withdrawals. This not only reduces operational costs, but also minimizes the frequency of cash refills. Additionally, modern ATMs offer contactless and mobile payment options, enhancing user convenience and aligning with evolving customer preferences. Staying adaptable to digital and security enhancements is key. Implementing robust security features like anti-skimming devices and encrypted PIN pads helps protect against fraud, which, in turn, strengthens trust in your machines. The ATM market is competitive, and owners who prioritize security and convenience tend to attract higher transaction volumes, particularly in areas where users have security concerns. 3. Long-term planning and market positioning. Successful ATM business owners don't just think about the next transaction, they think about the next 10 years. Planning for the long term involves considering changes in cash usage trends, monitoring competitors, and responding proactively to regulatory shifts. For example, the rise of digital wallets may influence cash demand, especially in urban areas. Understanding these trends helps you adjust your machine placements, fee structures, or even the types of machines you operate to stay relevant. Strategic location diversification can be another effective approach. Expanding into underserved areas or niches, such as tourist-heavy spots, can provide reliable income streams with less competition. Many ATM owners have also found success by focusing on specialized markets, like outdoor events or festivals, where temporary ATM placement meets high demand in concentrated settings. Flexibility and creativity in location choices often give small operators an edge over larger, less agile competitors. Conclusion: thinking beyond immediate gains. The ATM business presents a unique opportunity to earn passive income with relatively low daily involvement, but it requires thoughtful strategy and adaptability to thrive. This industry goes beyond just placing machines. It's about finding the right locations, staying up to date on technology, and building partnerships that drive mutual value. As cash demand continues to fluctuate and technology reshapes how people access money, successful ATM operators will be those who adapt to these changes with foresight. Whether you're placing a single machine or planning an entire network, Think critically about your approach. Focus on reliable service and aim for sustainability over quick gains. By positioning your ATM business for long-term growth and relevance, you're not just building a source of income. You're becoming part of the infrastructure that keeps cash accessible and convenient for a diverse range of people.